The AEC stands for the ASEAN Economic Community that comprises 10 countries in ASEAN. AEC has been in the making for many years. In come 2015, Malaysia will take the chair of ASEAN and will officially launch it. What this means is that the concept of AEC will be official and trade liberalization will start to accelerate at a faster pace. And what this means for businesses is that businesses will enjoy greater trade facilitation, reduction in tariffs, and perhaps even eventual removal of all tariffs within ASEAN. EU is ASEAN's third largest trading partner. Trade has been increasing, but there are issues as well, in the sense that from the EU's perspective, there is US, which is making big inroads into ASEAN. What is happening today is that EU and ASEAN are starting to talk about a free trade agreement. And we think there's absolute importance to businesses in both EU and ASEAN to have that. From the EU's perspective, it wants to secure its trade position because the US is making big inroads into ASEAN. The US is negotiating a Trans-Pacific Partnership Agreement, and the EU, in my view, should actually be accelerating, putting their foot down on the pedal to get the ASEAN-EU FTA on the road. World Trade Organization, WTO, is not really functioning. It has stumbled. And therefore what is happening is that countries are looking to form trade blocs. And these trade blocs will eventually, one day, amalgamate and form what WTO has originally intended to do, a multilateral trade agreement. Increased trade has brought about lots more investment for AEC. Just as an example, in the year 2013, AEC received more investments, foreign direct investments, than China. Now, you would have thought that China would continue to dominate FDIs in the world, but the center of gravity has actually been shifting subtly. And the reason for this is because the ASEAN countries have come together and formed AEC. AEC has got a single market of 600 million people. It is a single production base where a company can set up a factory in one country within the ASEAN and be able to export relatively free of tariffs to any of the other 9 countries. And for that reason, it is in the interest of investors to look at these 10 countries as one trade bloc. And if we were to increase its investments in one country, it serves a single market for all 10. And mind you, this is 600 million people. So with the AEC concept, what you have is not a disparate group of 10 countries. You have one bloc that stands shoulder to shoulder with China and with India. And therefore the AEC is an attractive investment destination. And proof of concept, 2013, the AEC received more investments than China. Now, if you think about it, there are other reasons, of course, at play. The wages in China are no longer cheap. If you set up a factory and employ workers in a coastal city in China, the wages are probably equivalent to what you would pay in, say, Malaysia. And certainly, the Chinese wages are today far more expensive than in Thailand or Indonesia. And unless you're setting up that investment in China to sell within China, you wouldn't want to do it anymore. If you're setting up an investment in China to export elsewhere, you might be better off if you cite that investment in the AEC.